Hey, everybody. Steve Olson here with Levi Mills. We're back at it. Thanks for coming, Levi. How's it going today?
Doing good.
Ryan out in DFW at all?
It's kind of hard to believe that, given the year we've had so far, but
Yeah. Congratulations. Now it's going to be an air fryer in Dallas for the next 4 months.
steamy for a bit. Yes.
Yeah. Well, Levi has joined me today because we're going to talk about some properties. And on this video, we want to feature a property that the Peak Group picked up recently, 7624 Dolan Street in Fort Worth, not the Fort Worth Metro, in Fort Worth city limits. And as I understand it, Levi, we originally picked this one up to do in our Burr program, but oftentimes those require such quick closings that we end up having to just close. And we've elected to just finish renovating this one. Does it need renovation? What's the deal there?
Yeah. So there is some work to be done on this one. It's a solid little property, 3 bedrooms, 1 bath, 1,000 square footer. But it's got a little work that does need to be done. And from what I understand, we could still do it as a Burr property, or just do it upon completion. So there's a couple of options there. It's southwest of downtown, in an area toward Benbrook, which is a nice community in southwest Fort Worth. It's really handy to transportation. So it's just off of 377, which is Benbrook Boulevard, which gets you down to 820 really quickly. As far as larger employers in the area, it's only about 11 minutes from Lockheed Martin and the Joint Reserve Base. So there are a lot of jobs in that area, which is just to the north of this property. Only about 16 minutes to downtown and the Fort Worth Hospital District, which obviously a lot of jobs in both of those areas as well.
So big notable employers in the area, but in the core of Fort Worth. So it's, somebody's living there because they want to be 10 to 15 minutes from their job. Does that sound about right?
Yes, and being off of 377 there, it makes transportation to, any direction you want to go really handy. So that makes it great workforce housing.
Okay, very cool. 7624 Dahlen, Dahlen, and we'll have the guys put this up on the screen as we edit the show. But let's get into the numbers, and I think something that jumps out at me is that when we're going to talk through the pro forma that assumes a full renovation. So an investor buys this and the property has been properly updated. Your major systems and components have been repaired or updated. If the roof is on its last leg, that would have been replaced. Oftentimes there's some kind of a cosmetic refresh. On a property like this, you don't want to do too much. You don't want to do too little. If it's clean and neat, the location is so ideal that somebody will rent this thing out. And we manage a fair amount of properties in the area, if I recall, yes?
Yeah, we have a number of properties in that area. And to go back to what you're saying about renovation, obviously we're driving to get as much rent from that property as is possible. And you're right, you can spend too much money on that because you're never going to get a certain, beyond a certain level. But you certainly don't want to spend too little, because it's going to stay on market longer and you're going to have to reduce rent. So we don't want either of those conditions to be the case.
Right. And once again, telling the listeners that, the market is going to talk to you about rent, and, you can move the rent higher than what the market data says, but you're going to have to relax your tenant qualification standards. And that usually ends with an eviction in like the first 90 days if you do something like that. Yeah, there's a reason somebody is willing to pay above market. It's because they're scamming you. So, well, let's get into these, and we're going to talk about this pro forma as if it was fully renovated, $190,000 home in the Dallas-Fort Worth metro, which is quite rare. And renovated, this thing is a 7.2% cap rate. So we certainly like that. I am going to go through high-level numbers here. It looks like, we've got that purchase price of $190, and our loan amount will be $152,000. You have a little over $6,000 in purchase costs associated with the loan. So a very important figure here is an investor would be about $44,650 out of pocket to do this deal. You could certainly put more money down if you wanted to and raise your cash flow. Obviously, it's more money out of pocket, and everybody makes that decision. But we can get you in touch with our our lender who will help with that sort of thing. 7.2 cap. I'm liking that, Levi. Haven't seen that in a while. Yeah. Yeah, absolutely. So we're looking at rents of $1,600 a month, which at that location on a 3-bed, that's kind of in your sleep. You're going to get that figure. And I would stress that, yeah, you get that because we don't want to mistake the term affordable housing with affordable housing, right? There's the noun and the verb of affordable housing, the noun being Section 8 or some kind of a government subsidized housing voucher, or affordable housing, the verb of, well, it's affordable, right? It's low cost housing, which is forever in demand in every city in America. Okay, great. So I'm looking through our OpEx here. So we're projecting about $3,900 in property taxes for the year. We've got $1,200 in insurance, $384 in maintenance. And from what I can tell, Levi, on this one, we're doing property management free for the first 2 years. Yes? That's correct. Okay, so people are going to have that question of what happens in a couple of years when there is no longer free property management. Get with us. Typically the peak rate would be 8 to 10% on something like this. So we can help you run figures on what that looks like. So if we kind of look at this over time, and this is something that we're really stressing because the housing market is confused right now, Levi, right? So are you looking at the investment returns on the pro forma? I'm on page 6. And yeah, and they'll show this on the screen, but a couple things worth noting. Your return on investment, and people look at all kinds of things, cash on cash or return on equity, return on investment, internal rate of return, right? These deals will start out slow, especially the first year. If you sell it, you've immediately gone negative, right? Because we're not in one of those markets where it's worth 10% more the day that you bought it. So your return on investment, right, and your IRRs start to get pretty respectable in basically the third year is where we start seeing double digits in your ROI, and you get up into 6 and then 10 on your internal rate of return. You recall, Levi, we're using 3% assumption on expansion for the expenses and the income. Okay. So your interest rate would be a 30-year fixed on something like this. So that's locked. Your debt is taken care of. And then we're assuming a rate of 6.75, which is, I actually think that could be a smidge high based on what's been happening in the market today. The Treasury's been coming down, but I really encourage you. This is all about running the numbers, and our preferred lender, JT, can help you run various scenarios on buying rates down. And we're including, by the way, 2 points to buy your rate down. You as an investor could put down a little bit more. So it's, how do we engineer this to kind of just turn it into that coupon that prints a rent dividend for you every month? Okay, well, we're going to show this on the video. Kyle's going to dub it in for us, but is there anything else we should know about Dolan Street, Levi, before we go?
I think just to tag on to what you're talking about with current interest rates and so forth, our strong belief is that at some point interest rates are going to improve, and that's something that you can change down the line. You can't change the number of bedrooms or the square footage very easily, but you can change your interest rate, and at a relatively modest cost. You can refi when rates do improve, and I think that's one more layer that you can add on to the benefit of an investment like this. At a later date when numbers make sense.
Right, and I think it's smart to go into these things where if money gets cheaper in the future, we're going to take that, right? And you can control that. You can jump on it if it gets cheaper. If money gets more expensive, I think you're likely to be very happy with this rate. I've got a property I was looking at that I own. I was just kind of doing an assessment on it the other day, and my interest rate on that is 4.5. At the time, I was not happy about 4.5, right? Because I've got other investment properties in the high 3s. I would take 4.5 till the cows come home all day long now, right? So I'm very happy I have that property, and it's led to some very steady rent increases over time. But I had to be patient, right? It took a couple of years for things to unfold for that situation to happen. So If rates go up, you're probably happy. If they stay where they are, you're probably happy because you were in the game. You're not late to the game. If they go down, you refi. I think the thing that investors are probably nervous about right now is, well, what if values go down, right? Which is understandable. And you can make a case for they will or they won't. Ultimately, we don't know. We're not market timers, but an investment like this that's low cost is a good idea for somebody who's not trying to flip out of this thing in a year or two. You want to hold it for 3 years plus, which I think is always a good idea on residential income properties. That's Dolan Street, everybody. Reach out to us and we're happy to talk. Well, thank you, Levi, for your time. We'll catch you on the next one.